Hey everybody, Josh Sigurdson, a World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen. And oh man, I can't even imagine how many times I got delusional comments from people that opposed what we spoke about here at WAM regarding real estate, most notably in Toronto, where we've seen massive drops. But before the massive drops, we saw massive rallies in the real estate market in Toronto, and it got to the point where it was ridiculous. It was obviously a massive bubble. Anyone could see it, but people were so starry-eyed with the possibility of making more and more and more money. Well, it can't end here. Maybe it'll end, maybe we'll make another 100% on our investment. It's absurd. But anyway, I wanted to go into this article from the Financial Post because it's finally to the point where it cannot be ignored any longer. It is historic what's happening right now in Toronto to the real estate market. Going to happen in all these other places too, Vancouver, all these other places, but I think we reported earlier in 2018 about how we saw massive dips in the Toronto real estate market as we saw the beginning of this all happening, and people are going, oh no, it's fine. We're going to see a big rally up after this. This was just a little dip, a correction, and now we're going to see the all-time high rallies in the real estate market in Toronto. Not exactly the case, because as this article from the Financial Post says, Toronto new home sales plunged to lowest in almost 20 years as unsold condos pile up. And as the article goes into, new home buyers finally reached their limit in Toronto last year. After years of frenzied price increases, sales of new homes in Canada's biggest city sunk to the lowest in almost 2 decades in 2018, and the supply of unsold condos piled up, according to a pair of new reports released Friday. And I quote, greater caution should be taken when investing in new condo units, particularly over the short term as trends point towards slower appreciation, Sean Hildebrand, president of condo research firm Urbanation, said in the report. The market has started to normalize after unprecedented activity in recent years. Toronto's housing market is dramatically cooling after higher interest rates and new mortgage regulations bite. The city joins other global metropolises such as London and Sydney, seeing a slowdown as international investors retreat and domestic buyers balk at higher prices. Sales of new homes fell to 25,161 from 2017, according to the Building Industry and Land Development Association, which used data from Altus Group Limited. That's the lowest annual number since Toronto-based Altus started tracking the figures in 2000. Single-family homes showed the biggest decline, plunging 50% to 3,831 from 2017 and 74% below the 10-year average. Condo sales fell 38% to 21,330, but only 4% below the 10-year average. While the benchmark price of a new single-family home slumped 6.7% to $1,143,505 in December on the year, condo prices surged 11% to $796,815, according to Build's report. But figures from Urbanation show further weakness building in condos as well. A record 21,991 units are expected to be completed this year, up 29% from 2017. While 98% of those units are pre-sold, more than half were bought by investors who will either rent their units to sell them, the firm said. The number of unsold units in development jumped 47% in the fourth quarter from the year before to more than a 2-year high, and price gains for units under development grew only 0.4% between the third and fourth quarters, the smallest quarterly increase in almost 3 years. The slowdown in activity last year can partly be attributed to a less demand from investors who typically represent the largest component of new condominium purchasers in the Toronto region, according to Urbanation's report. The market is out of balance, said David Wilkes, president and chief executive officer of Build, an industry group for about 1,500 companies in the Toronto region. And I quote, "We join other industry groups in calling on the federal government to revisit the stress test and allow a longer amortization period for first-time buyers. And we look forward to working with our municipal partners on removing barriers to development, such as excessive red tape and outdated bylaws." Okay, so asking the government to fix problems that are caused by government isn't going to help. But I want to mention something that really stands out to me about that article, John, was the fact that condominiums were going up. They say further weakness in the future, but it shows a great sign of where wealth is at when we see detached homes falling and condos rising. It tells people that people are getting more poor. They can't afford as much. Inflation's hitting them, taxes hitting them, regulations hitting them. These home prices are hitting them, and they're moving to cheaper ways of living. And we're seeing a massive gain in the building of condominiums throughout the world, really, because it's like governments and central banks are, playing with money, raising interest rates, all that kind of stuff. And then these companies are looking at that and going, well, we need to prepare for the future, what's affordable, what people will be able to buy. So we'll kind of downgrade, build way more apartments and condominiums than we will build houses. I've seen this in so many cities around the United States and Canada. John, it's getting to that point where we see that bubble popping. We see the everything bubble bursting, as we've talked about so many times before here. It's not just real estate, but real estate is a big part of this, and we can attribute a lot of this to the banks and central banks, these crazy loans, collateralized debt obligations at BMO and, mortgage-backed securities, people lining up for subprime mortgages. We are seeing what we saw before happen again. John, what do you think?
Well, it's just a natural way of the cycle, because the cycle calls for mass amounts of debt creation in order to prop up the fiat system, and the interest that needs to get paid always is never being printed. So we need more and more debt to pay off the ever-increasing interest cost on that debt. So that's just a natural outcome of these bubbles. And it's interesting, when I wrote my book, Canada, the Greatest Economy in the World, ? I just did a last little add-in April of 2017, where I was talking about how the markets, I saw bubbles in the markets, and I pulled data from the Bank of Canada. And this one chart here, Josh, is just very fitting. It just shows the peak of the bubble in Canada, where people said that I was crazy for calling that. But I had, Toronto was up at 12% annually. Vancouver was up 22% annually at that time. And sure enough, that was right at the peak of the bubble. And in my book also, I went into great detail about how dependent we are on construction as a part of the economy, as a part of the GDP. It's almost 20% of the GDP of Canada comes from surrounding industries to the real estate industry. So we're a debt-driven system that needs to create all these new buildings, all these new things in order to get that GDP to 2%, so you can keep on, getting more and more debt into the system. That is what this whole system is all about. And
debt leads to more dependency.
Yeah, and we saw hyperinflation basically in housing prices. We didn't see it in a lot of other things, because that's where the wealth concentrated, because it was a very cheap debt. And of course, the elite, they could buy up mass amounts of that debt and then just shove it into the real estate market to try to get some wealth, and it ended up in the stock markets as well. And what was interesting is, in my book also, I was talking about at the time how actually Canada didn't have, and I can quote it here. It says, Canada is one of the few jurisdictions that doesn't have a developed RMBS market. This could be the first step to getting that done, it says here, as a quote that I took out from a financial article that I was looking into, and that just shows you, like, right after almost, Josh, it was just maybe a year, like half a year or so after. Remember, we did the video on how BMO, right at the peak of the bubble, issued $2 billion worth of mortgage-backed collateralized debt obligation out there. It's really hilarious to watch, like the banks are just washing their hands clean and sending those assets onto some pension fund who knows who was duped into buying those terrible assets. And of course, as I was publishing the book, I had to add in about Home Capital Group that got bailed out. It was a lender which used actually, they had people putting money in as investors, the depositor investors, and they actually paid them back. But the problem was that the investors saw the issues with all the debt that they've lent out, and they were worried that they were not going to get their deposits back, so they started pulling out. There was a massive bank run on Home Capital Group, and then you saw Buffett come in and bail them out with $13 billion, and then he got probably a great deal on some other assets there, of course, and saved the day. There was nothing else to worry about. Everything is fine. But now we're seeing just another step into this. For example, the housing price is about 13% down from that peak in April 2017 in Toronto general area. So you're seeing that they're getting hurt in Toronto, but also you were mentioning that people are moving into condos, and there's two things to that. There is, of course, what you said, that people are getting poorer, they can't afford the big houses anymore, but also you got the baby boomers, selling those houses, and now the problem is who's going to buy those houses, and that's going to further, fuel into the downward spiral of the housing market in Toronto, of course. The pressure, the sales pressure that's going to come in when all these baby boomers are actually retiring and trying to offload their house, their asset. Because what's interesting, Josh, the house is the major asset that the population, the middle class and the poor has. Well, the middle class mostly, because they believe that is going to be their retirement. And a lot of people are going to get severely hurt here because they believe that their house was an asset because it was constantly going up in price. A lot of people use their house as an ATM, just printing mass amounts of money with it, and just taking out that excess equity at the top all the time as the housing prices was rising. But now the problem is a lot of those people are going to be in negative equity. They're going to struggle. So when they sell their house, well, it's like, I gotta actually pay money to actually be able to afford to sell my house. So they're going to be in negative equity, and that thing that was an asset for a lot of people that thought they could retire on is now a liability, which it was all the time, because you got to remember your house is not an asset. And this is Robert Kiyosaki taught us this back in 2002 when he wrote his book Rich Dad Poor Dad, because if your house takes more money out of your pocket than it actually brings you back in, it's a liability. Like, I don't see and understand why people believe that this is an asset. Yeah, it could be an asset if you actually sold it at the peak in 2017.
So John. Yeah. John, can you explain a bit to the viewers the correlation, of course, between what the central banks are doing and these housing bubbles as well?
Oh yeah, there's 100% correlation there, because what happened is during crises, the central banks trying to push down interest rate in order to save the economy and trying to make more people borrow to then pay off that debt, the ever increasing debt. And when that happens, a lot of people find that, oh, this is really cheap to get money now. I can actually afford it. So they go in and then they start borrowing money from the banks. And what happens is that the banks just shoves massive amounts of money into the economy. You've seen real estate bubbles all across the world, Josh. There are so many of them. It's hard to name them all. Like Australia, like Sydney has a whole it's massive housing bubble there, and other places in Australia as well. Oslo has a very big housing bubble. The Brits have one, but then they had government policies coming in to try to help and save all of this from happening, because the worst enemy of the central banks and of this whole system is deflation. If you get deflation, you will actually have the debt will become so much more expensive, and people can't afford to pay that debt anymore, and then it collapses in on itself. It's just a self-fulfilling prophecy. Oh, what happens to the peak of the system, because it's not sustainable anymore. There's nobody else to actually pay off that excess interest, and you get mass amounts of bankruptcies. And that's what's called the credit cycle, that they call it. It's because of that, like that whole thing with the central banks lowering interest rates, all this fun stuff that they do in order to manipulate the economy. It's just created by the central banksters.
Yeah. Yeah, and one of the great examples of, I mean, one of the only examples, I should say, of a true deflationary period that we've seen in recent U.S. history anyway, it was under Paul Volcker in the 1980s. But overall, we still see, well, massive devaluation, massive inflation, and then tie that with taxes and the centralization of the markets and over speculation, these bubbles, and of course, regulations, legislation, it's a beast that's built up by many measures, and it's all terrible because people are dependent if they are in debt. Debt servitude means people servitude to the state, the banking system, these entities that thrive off of debt and thrive off the dependence, obviously, the people that depend on them.
Yeah, and also the government thrives off of the debt, because what happens when real estate prices goes up, their taxes, property taxes goes up, and they get more money. So they love these bubbles as well. But the problem is now that it's going down, all that money that they became dependent on the government is now evaporating because of these crises. And that's why you see guys like Doug Ford coming in and getting elected, because people are fed up with things. But of course, they're the same kind of people, politicians. But they're the symptoms happening because people are sick and tired of this constant getting stolen from at any given moment, and not ever getting ahead, because they just get less and less money to afford a living. And then you're going to see the Yellow West. I believe like Yellow West movement, it's actually took off quite in Canada, because we have very similar things happening here with massive taxation and high inflation on both sides, just strangling people to be able to afford anything. And that's what happens in a fiat economy.
Yeah, and of course you cannot ask for more collectivism to solve the problems of collectivism. Cancer doesn't cure cancer. Obviously, kerosene doesn't put out fire. So it may look like a liquid, but it will,
tax the rich,
make that fire worse. So no, don't tax people. That's extortion. It's theft, and we need to look to ourselves, the individual free market, outside of the system that's highly centralized, and we can root it to government and central banks. So, folks, let's look at the fact that while we have this everything bubble worldwide, we have not just real estate bubbles, which are affecting countries around the world, everywhere from Britain and the United States and Canada to Australia and China and the rest of it's everywhere. It's a contamination of massive centralization, investor speculation, and outside, it's outside the realm of reality. There's no real fundamental value there. China's building ghost cities as they have been for so long, and it's just becoming worse and worse. So, folks, we have to look to self-sustainability and financial responsibility, because while this everything bubble comes to its inevitable end and all fiat currencies eventually revert to zero, and as we see, the pension bubble, the student loan bubble, the derivatives bubble, which is multi-quadrillion dollars, when we see all these things get to their inevitable end, we need to be able to protect our own purchasing power and not look to the same old practices that have pushed people into poverty and debt servitude for so long. We need to look to ourselves. We need to be responsible. We need to look to gold and silver and, of course, probably decentralized cryptocurrencies that have fundamental value. Of course, this is our opinion, not investment advice, because in the end, this isn't about investment. This is about saving wealth, and this is about wealth insurance. So obviously, food, water, shelter, self-defense, you're not gathering things for the toughest guy on the block, but gold and silver as historic preservation of value. We've seen that for so long, and it's worked basically every time. Unless government gets involved, there's only a few cases where it didn't work, and that was because we saw Greece, for example, plunge the gold market with massive amounts of fake IOUs, which then goes back to the same problem of centralization anyway. So it just repeats the same problems. It needs to come down to you as an individual. So look to these things. We have an affiliate, by the way. We do have an affiliate, Mike Maloney, goldsilver.com. Very happy to be working with them. Pinned to the top of the comments. Make sure to check that out, because Mike Maloney has been great at teaching monetary history of gold and silver, and he's been working hard with cryptocurrencies as well. He's a brilliant person, brilliant company, definitely worth checking out. We wouldn't work with them if we didn't actually believe in what they're doing. We were very excited to find out we had the affiliate. Now, with that said, obviously, we need to look towards the properly decentralized cryptocurrencies. A bear market means nothing. People should be more bullish at the end of a bear market, at the bottom of a bear market, than they should be at $20,000 Bitcoin when everyone's flooding the crypto market with money and getting another mortgage on their house. in places like Toronto. But it's so absurd, folks. We need to decentralize and be self-aware and be able to actually understand money, because if we have control of our money doesn't have control over us. And you know what that means? That means we're not in debt servitude. We do not have to be on our knees begging for help when everything comes down from these massive, all-powerful cartels that we call governments and banks and central banks. So, John, thanks for joining us again. Can you give us one big bottom line as we finish off this video?
Well, the bottom line here, actually, I'm going to trigger some people here because it's all about this immigration that they're talking about, anti-immigration talk that's popping up now in Canada. Actually, if you want to keep your fiat currency system alive, that's why they're having all these immigrants. It's in order. That's why you see Germany is mass immigration there. Everybody's trying to prop up the system. They need more debtors. They need more people to believe in the system. And if they don't, it's gonna fail, and it will fail because of that. And I just wanted to say that because that's what they need, all that immigration. And a lot of people don't understand that. That's why the immigration push is so high in countries like Canada and Germany and a couple others that is in a decline, because when you decline like Japan did in population, you're going to have a problem because you can't keep up that debt-based system anymore and keep on getting more and more debt. So it will collapse eventually on itself. And it's a big problem here. Canada is, we didn't hit the recession of 2008 because we papered over it. We just printed so much more money and got into so much more debt here in Canada. So we're going to really struggle now throughout the next couple of years when we're going to severely hit. Like, look at our Canadian dollar, the inflation that we've had and the loss of value versus the US dollar. It was actually above par with the US dollar a while back, and now we're looking at, almost like 70, what is it? Like, I forgot, but it's 67, 70 cents on the US dollar, which is pretty terrible. It's not bad for people like us that actually make money in US dollars. It's actually good, but it's for people that are making their salaries in Canadian dollars are just losing big time because of the inflation is so high here in Canada. So we need to just come up with solutions, guys. And of course, I've written a book on the Canadian economy about those solutions. So I highly suggest you take a look at Canada, the greatest economy in the world, ? And what it says is that the facts you're not being told about your money and how to protect yourselves from the coming crisis, because it is a crisis that we're heading straight towards, and the fiat currency system is coming down. There's no way out of it. Like, we can't print ourselves out of it. Yeah, we can, but we're going to be in a hyperinflation collapse anyways. Wherever we try to go with this, there's not going to be a good exit strategy out of a fiat currency system, unfortunately.
No. It all comes down to individualism, and what you mentioned about immigration, while that has a huge factor that plays into it, is the central banking system and fiat currency failing. Also, obviously, we have to attribute government over time, Operation Condor, stuff like that in the United States, which destroyed these countries and put them into the past, into caveman days. Really, what they've done to some of these countries is just horrible.
Yeah, and Canada's been supporting that greatly, right? So
and it perpetuates these systems constantly, forever, and it just creates a problem reaction solution system, which is why we need to look outside of government and central banks and banks, because it all comes full circle. It's all problem reaction solution, the Hegelian dialectic forever. So we need to break free from that, folks. It comes down to you and being responsible. Responsibility and freedom play hand in hand. Anyway, that's a whole other story for another day. But until next time, thanks for joining us again, John. And until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth.
Be the change.
Like what you see here, OM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so vastly demonetized and censored on YouTube, as these guys come in and flag all of our content as hate speech. Also, check out our Bitcoin address below, as well as on the screen for you to scan if you please. And also check us out at steemit.com. We're at Josh Sigurdson. It's a future of social media where you get paid in the upvote of your post in cryptocurrency, Steem that is. So make sure to check us out there. Make sure to join us at Anarchapulco 2019 with people like Ron Paul, G. Edward Griffin, of course, Jeff Berwick, Vid Jedlicka. So many incredible speakers are going to be speaking. It's just a massively growing event. It is something you have to see to believe. So make sure to check it out below and save money on your tickets by using promo code WAM, that's WAM, and I hope to see you there. Also, check out our newsletter as we are getting demonetized and censored and all that. We don't know what comes next, so we have an email, worldalternativemedia@gmail.com. Send us an email with subject line yes, YES, and we will include you in the newsletter where we will continuously keep you updated. So until next time, thanks for watching, everyone. This is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.